frankly, I could see something realistically above that, maybe an additional 10% above that, if this kind of scenario plays out. Sort of the macroeconomic picture that is, I think, certainly bullish for silver like it is for gold and so a lot of the other commodities. But I think at the same time, you've got the market kind of coming to terms with the fact that silver is in a deficit. It's unlikely to be able to rectify that deficit for several years. In fact, the Silver Institute thinks we're going to see record deficits at some point over the next 5 years. And silver supply is unable to grow. We saw a peak 10 years ago in mined silver, and the overall silver supply is essentially flat. So flat supply, growing demand that's nearly 20% above supply. And our ability to meet those deficits is shrinking because we're tapping into these above ground stockpiles that have shrunk by about 800 million ounces in the last 4 years, which is the equivalent of an entire year's mine supply. So it's the perfect storm, Charlotte. It's really all coming together. And I think that the market's realizing that and also seeing gold, really run up tremendously. As we often see, and as we know, silver lags gold. Gold has had its run. I think it's priced in a lot of these factors, the macro factors and inflation and so on. And silver is starting to catch up with its own fundamental drivers. Yeah, I mean, I don't always agree with whether it's the Silver Institute or other research groups. I do think that we'll see, but I think that when they ultimately maybe revise some numbers, which they tend to do as the data comes in, that the demand from solar, I think, will have been underrepresented. And I think for that reason, the deficit that they are forecasting, and now if I remember right, it was about 118 million ounces. Don't quote me, I'm just going kind of roughly from memory. That I think the deficit that's forecast for this year will ultimately turn out to be on the low side and will actually turn out to be considerably higher. And I think that the demand from the investment side is also being underestimated. If you look at the prices today, the average investor is going to find gold expensive at $3,200, $3,300, $3,500 and naturally look for an alternative. And silver is that absolute most obvious alternative. And if you're looking at 100 to 1 roughly, which the silver to gold ratio has right now, silver is looking extremely cheap and affordable relative to gold. And that's who I think the average investor, that's what I think the average investor will turn to. Well, in fact, I just saw some data about demand in India, and given the voracious appetite for investment silver in India, so China and India are two big consumers of silver. In China, it's mostly industrial. In India, it's mostly investment. And surprisingly enough, they're very much bargain hunters in India and great negotiators, etc. But they love their silver and gold. And gold is expensive. And silver, again, for them as well, is a natural alternative to a metal like gold that's really has run up considerably. And interestingly enough, the demand is staying very high despite silver being at all-time highs in Indian rupees, in their currency. So that's interesting to note. Like I say, that they really like to buy metals or buy things when they're on sale or when they consider them to be bargains, and yet demand is at all-time highs along with the silver price. So as I say, the appetite for silver there is very strong, and that's one of the reasons I think that we're going to see in the future, when we look back on, say, the first half or the entire year of 2025, that investment demand will actually end up surprising the market beyond what some of the forecasts are. So we've been a few days above 35. I think that's crucial. And I think because of that, I think this is for real. I also think, though, that it's not out of the question that we could get some kind of, a little bit of a relief sell-off, if you want to call it, as opposed to a relief rally. One of the things that could lead that, there are several. For example, you could get, I think that the US dollar is sort of oversold sentiment wise in the near term. You could get a small relief rally in the dollar that would put a little bit of pressure on silver. If you look kind of more on the economic and the macro and the political level, for example, in the US, I think that, if you could get, and these are opposites, but it doesn't matter. One of them is maybe relatively likely, but you could get, for example, Trump and the current administration signing some big deals, some big tariff deals that would take pressure off, eliminate uncertainty and be encouraging for the economy. That I think would probably put pressure, would be positive again for the dollar and potentially near-term negative for precious metals. So that could weigh on gold and on silver. On the other hand, you could also get, because I believe this is being challenged in the courts, that, this sort of tariff rollout is being challenged in the courts. And the courts could rule that Trump can't do this, can't make these tariff moves. If that turns out to be the case, and that sort of whole tariff, uncertainty or issue gets, let's say, mostly wiped out, then it's a little bit of a reset. And then the premium that's built into some of the precious metals could also retreat. So, like I say, there are several things happening. Where I do see support is from, again, on the sort of the macroeconomic side, is that inflation expectations have run up. Inflation in the US, for example, in the first quarter soared from around 2.75% to about 3.5%. That's core PCE, which is the Fed's favored measure. That's well above its target of 2%. You had a negative GDP growth in the US in the first quarter. I'm not sure that will repeat, but nonetheless, that's a significant metric. And then you have bonds that are really suffering with, I'm going to say, relatively elevated interest rates, but also the outlook for inflation, and that the rates that bonds are paying now just do not serve investors well enough, given their inflation expectations. There's a fantastic bit of research from this is from the University of Michigan that does consumer expectation research on the inflation side and so on. And the 1 year inflation expectations for consumers in the first quarter jumped from somewhere around 2.5% to over 6% for looking out the next year, which is just a tremendous jump. And I think, what it says to me at least is that, we've had, since COVID kicked in, we've had all this money printing, we've had this big jump in inflation. Everybody's aware of it and everybody's dealing with it on a daily basis. I think what you have now is the average consumer is coming to terms with the fact that inflation is not only not going away, it's likely to get worse. And I think we'll see repeats of what we saw in the 1970s, when we had late 60s, mid 70s, late 70s, we had these three successive waves of higher inflation. And I think we're going to see a repeat of that. And I think that consumers, although, the average consumer doesn't, has not lived through and would not remember or be aware of what happened in the 70s, I think that's a great analog, because I also think that we're going to have, partly because of tariffs, we're going to see ongoing economic weakness. So we're going to have this stagflation scenario very likely play out. Elevated inflation, weak economic growth, weak GDP. And so, again, like I say, a repeat in many ways of the 1970s. And so all of these factors are coming in. And I think that the average consumer sees that. And I think that will sort of, even near, medium, and longer term, certainly be very supportive of silver and gold. So generally, yes, I still see that playing out. I do expect that $40 is a very realistic target sometime before the end of the year. And frankly, if things get a little heated, if you get where we could very well see, I think, an official recession at some point in the next couple of quarters. An official recession, I should say, is from my memory of the definition, 2 consecutive quarters of negative growth. Nonetheless, if there's a bad enough outcome when it comes to tariffs, significant slowdown economically, despite what we've seen from central banks recently, mostly I think Canada and the US being sort of on pause with rate cuts, it would not surprise me that we could see a return to rate cuts later in the year. And that kind of scenario, I think, would absolutely basically have have investors really see that how central banks have caved. It's kind of like a game of chicken, right? And at some point, they call it and they say, okay, we can't do this anymore. we are in a position where perhaps, prices are remaining high, but if unemployment slows down enough, we need to make a choice. And the choice, despite, say higher inflation and higher prices, the difficult choice is going to be to cut rates, nonetheless support sort of the employment sector, and the market will see that and say, okay, the central banks are really stuck between a rock and a hard place. They've basically thrown their inflation side of or trying to control prices, that side of the equation under the bus. And they favored, supporting employment and allowed inflation to run, which I believe will be the ultimate choice that they will make. And so once that happens, the market will say, okay, that's it. They've caved. They're no longer gonna, be tough about trying to control inflation. And because of that, the upside for the precious metals is considerably higher. And that's why I think all of that to say that despite my target of $40, let's say by the end of this year, frankly, I could see something realistically above that, maybe an additional 10% above that, if this kind of scenario plays out. So I absolutely watch very closely gold because the two metals are very much interrelated. They have a lot of similar applications. Silver, of course, is the one that's much, much more industrially used. Nonetheless, gold has a little bit of industrial use, but both are jewelry. You have, in the case of silver, on the sort of decorative side, you've got silverware and so on, but they're both money. That's for sure. And silver has been money longer than gold has. So we also know that the relationship, is volatile. It's not a steady relationship. The gold to silver ratio over centuries and millennia has actually continued to typically move higher. But I do think that we're going to see a scenario where the relationship shows the ratio falling. For probably the bulk of the balance of this secular bull market. And so we're at historically high levels right now, still around, I think it's 92 or so today. And if you look at, maybe more recent past, say the last 40, 50 years, the ratio is averaged somewhere around, say, 60 or so. We're at 92. If it went to the average, in fact, I'll be even a little bit more conservative than that. If you had, let's say, call it $3,200 gold, and you had the ratio at 70 to 1, which is still relatively high. That would call for $45 silver. And that's one of the reasons why I think we could see realistically. Remember, my assumption was $3,200 gold, and it was 70-to-1 ratio. So with that in mind, if you have to make certain assumptions, the $45 target for silver, I think, is pretty realistic to even, potentially by the end of the year. And if not, I think in the first part of next year, I think is quite likely. That's a 40% gain from where we are right now. Maybe not quite that, but that's pretty strong. And we've seen silver stocks absolutely explode in the past week and a half. I mean, I've got one company that I have in my silver advisor letter. In less than 2 weeks, it has doubled. I mean, it's just incredible. I don't think I've ever seen that myself. I'm glad that it's one that I recommended, but I don't think I've ever seen that in that short of a time frame. So it gives you some idea of just how explosive these stocks can be. And because the pool of silver stocks, especially quality ones, is so small, when the money moves into this space, it really truly is explosive. So, people need to keep an eye out for it. Yes, it's volatile. There are ways to manage that. But, to go back to sort of the first part of the question, the relationship is there. I think it will normalize, meaning the relationship, the ratio will come down. In fact, what we've also seen historically is that when the ratio starts to fall, which it has, it's been from about 106 or so in a recent peak. We're at 92. That's a pretty significant fall. And it goes towards its average. Let's call that average 60 or so. It typically tends to overshoot, which means in this case, the average goes even farther down. So we could go to, who knows, somewhere like maybe 40 or 30-to-1 in the ratio. That would be tremendous for silver. That could bring silver above $100. And I'm not saying that's happening tomorrow, but in the next couple of years, I would say that's certainly something that could easily be in the cards.